Hello, everyone. Jeff Cherry here at Cherry Wealth Advisors. I want to take time to reach out to our clients here at our firm and talk about kind of what's going on here in the stock market. I'm sure if you're watching the news and the talking heads like I am, very disturbing, very difficult to see the stock market volatility right now, what's happening. Even the month of April, the NASDAQ is down almost 15%. The S&P 500 is down about 11, the Dow Jones 3.5 to 4. So we realize it's a lot more fun when the market's going up, but these are the times where kind of the pain that you have to go through in the market to get the types of reward and gain that the market does give us. We still believe that stocks and equities are the best way to accumulate wealth in the United States. It's been proven year after year, time after time. And yes, you hear that story that, it'll come back. It always does. I don't want to be that broken record. But we have to understand at these times, it's very difficult for you, and we know that, to watch the market continue to have these tough times, inflation, the Fed changing interest rates. I know it's difficult watching the market right now, but this is why we have a plan. This is why you came to Cherry Wealth Advisors, to help you build a plan. And I kind of like to take time right now to kind of remind you and kind of refresh what we've done here for you at our firm, and kind of reconfirm the plan that we put together for you. So I'm going to pull up my screen here for a minute, and let's go back to actually, talking about our funds and our accounts right now, and reminding you all of what we call that financial house, and the reason we've employed certain types of assets to build your retirement house. To refresh your memory, we always talk about the foundation of our house. A lot of you have built a foundation. This is your totally safe, totally protected bucket of money that in stock market times like these, where you do not lose a dime, 100% safe and insured. We talk about building money in the walls. The walls investments are typically different from stocks. They're typically more a conservative, maybe a dividend type portfolio. Some what we call non-correlated assets, things such as gold and maybe real estate and dividends. Not quite as aggressive, a lot more conservative. And then the roof of your home. These are the stocks. These are the equities. These are the accounts that you're seeing these, 8, 9, 10, 15% losses, depending on the assets you have with us. And I just want to refresh your memory, folks, and help you understand that when you hear the news and you hear the S&P is down 11% or the NASDAQ's down 15%, we want to remind you, this is why we built this house. Your accounts, your overall net worth with Cherry Wealth Advisors is not down as much as you hear on the news. Yes, the assets we have up in the roof of your house, the equities, those are getting hit pretty bad right now. Let's just call it like it is. And you're seeing some volatility there. But remember, this is typically our long-term money. Just like when you were working and you maybe saw what happened in 2008 and 9/11, you didn't get too nervous because this was money you weren't going to be needing for a long period of time. And same thing with the plan we have with you right now, folks. This is our long-term money. At some point in time, we all knew we're going to be down 10, 15, 20%. And we know the accounts can go up and go down in this type of an asset class. Yet when we look at the walls of your financial house, we're not seeing as much volatility here because they're different asset classes. And then again, the reason we put money in the foundation is exactly for times like this. This is that basket of money you have with Cherry Wealth Advisors that contractually is guaranteed, and you will not lose a dime. So just kind of remind you of that. Don't focus too much on one part of the house. Try to remember to focus on the entire home. When I've been reviewing clients' accounts recently that have, we have a lot of plans we call basically maybe a 40, 30, 30 plan, 40% down here, 30% here, 30% here. Yes, we might be down 10, 12% up here in the roof, but we understand the remaining part of your house, most of you right now, from January 1st until right now, might be down 7 to 9% total on all of your net worth. Now, that's not fun either, but a 10% loss in the market is really nothing. It happens all the time. So what I want you to understand, ladies and gentlemen, we are paying attention. These two parts of your financial house are actively managed. We are tweaking it. They're making minor changes in this time of volatility. We're not making major changes right now because understand each of these parts of your house has a mission statement. Your safe money, your quote conservative money, and your more aggressive money. This is the one that's getting all the attention right now. So here's what we want to remind you folks. We are paying attention. We know this is difficult, particularly if you're retired, and understand that if you're creating income or taking income out, we're not taking income out of here. We're pulling income from the foundation of the walls. We want to minimize those losses. Number one, if you are concerned, please, you know our phone number. I can't read your mind. If you want to talk with us, if you want to have a 15-minute review, if you want to have a Zoom meeting, we can rerun your risk analysis. We can rerun what we call that speed limit sign we took up for you. And so we're here to help you anytime to do that. Remember, we do have a plan. We are preparing for times like these. And that's kind of the part of the planning process of that mission statement of building that financial house for you. I also want to give you this opportunity. If you would like to schedule that meeting, 850-CHERRY-9, or go to our website, get on my calendar. We can have a quick 15-minute conversation. We can have a Zoom meeting just like this, or we can come into one of the 3 offices and sit down with you. We can rerun a risk analysis and kind of see where you're at. And if you're still comfortable in the risk level that we currently have you at. I also want to remind you, there's times like this. A lot of you have a lot of cash sitting on the sidelines. This also might be a buying opportunity to kind of get in when the market's down like this, or look at some other assets. Also, if you have other funds, you still got money at your 401ks, your TSPs, maybe you got brokerage accounts where you don't feel anybody's watching it and you're concerned about those, we can run a risk analysis on that also to kind of guide you along the way. So here again, be patient. We will get through this. In a year, 2, 3 years from now, do we believe the market will rebound and come back up? We do believe that, but these are trying times. We want to make sure that we understand that. We know your concern. And if you want to reach out to us, rebalance, look at buying opportunities. There's some cash alternatives right now. We got some things paying 3.5% on a fixed chassis, very attractive right now. We appreciate your confidence in us. We're here to help you any way we can. You can talk to me, Mr. Stevenson, at any time. Have a great day. Be patient. I know this is tough. I know it's hard to watch this, but we'll get through it. And we want to make sure you have a great day. Thanks, guys.